an incredible energy in the area. Our family just loves the fast-paced lifestyle that Fourways brings. But honestly, the thing that attracted us most to this area was the active lifestyle that it offers. As a family, we've chosen to live in Fourways because of the lifestyle and convenience, and this is our neighborhood.
I'm Rick Nedling. I'm an Olympic gold medalist and shareholder and marketing director of Voldevie Estate, which recently acquired Pearl Valley Estate. I've been living in the beautiful Paul Franschhoek Valley for the last 5 years. We are situated right in the heart of the Cape Winelands. Security is our #1 priority, and it's something we work on every day. And this has earned us the reputation of being the safest estate in Africa. The lifestyle that this area has to offer truly is country living at its best. We're just 5 minutes away from the historic town of Paarl. Paarl really is an incredible area to explore, with little gems like the Spice Route and Fairview Farms. But the biggest attraction is the excellent schools. Franschhoek, on the other hand, is a major international tourist destination, and also known as the culinary capital of South Africa, with a diverse offering for every palate and occasion. Our recent acquisition of Pearl Valley is a major game changer for us. Our residents can now enjoy a wide range of amenities unmatched anywhere else in the world. There's the world-famous Jack Nicklaus Signature Golf Course, which is consistently ranked among the top golf courses in South Africa, and there are some beautiful properties on the course. Voldevie really is the ideal family environment. We also cater to equestrian lovers with facilities on offer for every discipline, from the 2 Hurlingham Standard Polo Fields to our state-of-the-art equestrian centers and miles of trails. Our horses live in paradise too. Voldevie has its own wine farm and cellars, producing award-winning wines which every resident can be proud of. I've been blessed to travel the world, but this is the place I come home to. I'm sure you can see why we call it the Valley of Life. And this is my neighborhood.
Sanibonani Dumelang, good evening and welcome to the Wednesday edition of the Private Property Podcast. I'm your host, Uzamantungwa Khumalo. It's a Wednesday and we're back to having the Absa home loan teams this Wednesday evening here on the Private Property Podcast. So you can look forward to a great conversation with Absa home loans in a little bit. But before we get into it, welcome to all our regular viewers to the daily property talk show that course brings you hot property topics that helps all of us on our property journey. And if you are joining us for the first time, well, we're on episode 217. So you certainly have quite a number of episodes to chew on. So do go to our Facebook as well as our YouTube page in order to catch up on some of that great content. Now, one of the things that you're also going to find on our social media pages are the other great shows that we bring to your screens every single weekday. Now, we come to your screens every weekday at 7 o'clock. And as it is a Tuesday, later on at 8 p.m., you can look forward to Esther Classing, bringing you the First Time Home Buyers Show. And there she will be in conversation with somebody who's walked the first time home buying journey and share their knowledge of how that was like, and certainly the experience of how that first time buying experience was like. And if you have at home a compelling story about the first time you bought your property, then do slide into our DMs and Esty and the team will be in touch with you to see if we can't feature your story on the First Time Home Buyers Show. Now, another show that you can look forward to, especially if you've got green fingers. I know so many of us are, spending time at home. And one of the hobbies that we're even picking up is, of course, planting our own garden herbs and veggies. Well, if you want to take it a notch higher, then the Farming Podcast is the show for you. Umbalinoko brings you that to your screens every Tuesdays and Thursdays. So do make sure that you tune in at 8 p.m. where she speaks to industry leaders who help you on all things agriculture. Now, every Monday and Friday, Chad is the man who brings you the Home Shoppers Show, where he gets to give you a snapshot of some of what you can expect in some of the best estates and complexes that this country has on offer. So if you are in the market for that property, whether it's your primary residence or perhaps even an investment property, then that is a show that you want to tune into. It will give you a good sense of some of the amenities that you can expect in the different complexes and estates that we have in South Africa. Well, that is some of the great shows that we bring to your screens every single day here on Private Property. And of course, we go even a step further. Do make sure that you go onto our website, that's www.privateproperty.co.za, where you can not only check out some great properties that you can rent and buy, but of course, you can go to our advice section and read up on certain issues that pertain to where you are in your property journey. Now, one of the things that you're going to find on our website is the competition that we are currently running. We're running the Sherlock Holmes Hunt on Private Property, and we are on the 8th week of this particular competition. And all you have to do to stand a chance of walking away with the 5,000 Rand voucher every single Friday is to crack the riddle. It really is that simple. This week, the riddle is actually relatively easy. I think if you are in Gauteng, you probably have a good sense of where it is leading you. And the riddle for week 8 of the Sherlock Holmes competition is, in Gauteng's Lakes of Silver, you can clean 6 people all at once. Your helpers are part of the family at this Lombardi's estate. Well, that is the riddle this week for the Sherlock Holmes Hunt. So good luck to you as you enter. And of course, one of the ways that we're keeping it fun and exciting is that every Wednesdays and Thursdays, we're also giving away a 500 Rand cash spot prize. And all you have to do to claim that money is to be watching us live. So if we call your name, then you need to drop us a text down here below to claim the money. Now, last week, Thursday, we didn't have a winner, so it is rolling over to 1,000 Rands. So do make sure that you stay tuned until later on the show where I may potentially call your name. You want to make sure that you're watching us live so you can claim that 1,000 Rand cash prize. Well, that's some of the fun that you can look forward to later on the show. But it is a Wednesday, and we have somebody from the Absa team, and this is somebody who needs no introduction. Every time I speak to him, I always say I'll see him in about a quarter, because that is an issue that we always talk to him about. We are, of course, unpacking Absa's Homeowner Sentiment Index, and the man of the half hour is Muziwakhe, who's a manager of analytics at Absa Home Loans. Muzi, good evening, and thank you so much for joining us.
Good evening, Zama. How are you doing?
I'm doing very well, Muzi. Thank you so much for joining us. It's always so great to go through some of the insights that the index, has. And I think one of the great things that we are learning from the index, but I think even beyond the index, is being able to find good resources that have good data about where the property market is and different players within the property space. And I think more than anything, it certainly, as a consumer, as an investor, puts me at ease to be able to easily access that data. That's also just very easy to digest, because oftentimes it's very easy for these things to be verbose and you can't understand it. So I know even for our viewers at home, that's probably quite a big relief. Now, Muzi, I think one of the big things that came out from the Absa Homeowner Index is that the confidence in SA property market essentially improved by 4% at the end of quarter 4 and is now at 80%. I must say that a part of me is slightly surprised that, sort of overall sentiment improved. I think there's a part of me, and maybe it's because I'm in too many sort of landlord groups and people who are sort of relatively skeptical, but a part of me would have thought that perhaps, the overall sentiment would have slightly gone down. Before we get into the nitty-gritties, perhaps just take us through the overall confidence first, because that for me was a bit of a surprise.
Yes. So Zama, if we time travel a year ago, we were sitting in the first quarter and we were kind of discussing what happened in 2019 and what we expected to happen in 2020. Around the middle of March is pretty much where the conversation was being held in the country. Going into lockdown, we've almost hit. Well, I guess in the coming weeks we'll be hitting our 1-year lockdown anniversary. So there was quite a lot of uncertainty in terms of what was happening in the market. We saw our Q1 overall confidence take a knock because of that. What then transpired as we went into lockdown, we then had a series of interest rate cuts, which really helped on the affordability side. We had financiers come to the party and really help customers to kind of go through the difficult time, where we had payment relief plans in all their shapes and sizes, which was a really good boost. And then as we were in lockdown, inflation stayed down. The Reserve Bank was able to put through a few more cuts, and then kind of coming out of lockdown level 4, we then saw this boom that happened in the market. And ever since, I think the overall sentiment has been on the up and up. So at 80% in Q4 of 2020, we're actually higher than what we were in 2019 even.
Mm-hmm. And, one of the things that I definitely wanted to touch on, Muzi, is the effect that the payment relief probably had on I'll say the consumer sentiment, because I think one of the things that we saw a lot of essentially all the financial institutions coming to the party with is providing some or other kind of relief. As you rightly pointed out, the different financial institutions positioned it differently. But I think one of the great things that I particularly appreciated with Absa and the way that it was positioned was, you've got, firstly, the system was pretty smooth. You didn't have to prove that you are, in financial distress or you were in need. One of my home loans is actually with Absa. You got an SMS if you wanted to opt in. I think you do a 1 or 2. I see that Muzi saying only 1. Listen, we'll see if you can persuade me to move all the others to Absa. But I think one of the things I really appreciated was, when that, I'll say, campaign sort of got rolled out, you got an SMS. If you wanted to opt in, you were literally just pressing 1 or 2, and it was relatively seamless. And other property investors that I've spoken to who banked with Absa and did use the relief just said how it was essentially, once you said yes, it was done. It was 3 months. And you didn't have to prove anything, which was, I think, a game changer, is sort of relative to other financial institutions that probably may have wanted you to provide proof of financial distress. And so when you kind of look at the overall, relief that financial institutions provided, and I suppose particularly Absa, how do you see that playing a role in consumers having a slightly different sentiment, or their sentiment being affected when it comes to this?
Yeah, I think the one key role that payment relief played last year, it actually played a major role, both, I would say, on the supply and the demand side. So on the demand side, so on the side of the buyer, it was then enabling the situation where the buyer is saying, I am able to buy, or I am enabled to buy. So when we provided payment relief, we kind of helped the credit standing of our customers, which was quite useful when incomes recovered, that there was a bit of mitigation in terms of the impairment of credit records. or credit ratings. And then on the selling side, or on the supply side, an important question is always, if I want to sell my property, is there someone to sell to? And in the market where the buyer is healthy and the buyer has appetite, that's also really good for the seller. So I think that's those are the ways in which payment relief played a role last year, where both on the supply and on the demand side, payment relief sort of improved sentiment in the property market.
Now, Muzi, I want you to get into the different, I'll say the different types of sort of things that were obviously when the consumers, what you asked them, and the different, let's call it, factors that were taken into consideration. Firstly, what were probably some of the surprises, if any, that you potentially saw in the Q4 results? As I said to you, I part of me is quite surprised that the sentiment went higher, and perhaps it's because we saw obviously more buyers being able to access property, and if anything, maybe I'm just talking to too many landlords who had a very bad experience in the earlier quarters and didn't quite have a positive sentiment when it comes to investing in property at this moment. But when you kind of look at it holistically, were there any surprises that came up for you?
So not surprises per se, Zama, but I think it was one of the things I was definitely really interested in seeing how the trend would change is what we saw when we did our Q3 survey, and when we spoke after our Q3 survey, there was this bit of confusion in the market where we had would-be buyers saying it's a good time to buy because property prices are low, and then on the supply side we had sellers saying it's a good time to sell because property prices are high. So there was a bit of a mismatch there. What the Q4 survey has now shown us is kind of what was spurring some of those comments, and we've now seen on the sell side, our sellers are still consistent. They're saying house prices are holding resilient, so that's great for the sellers. On the buy side, they've actually stopped talking about property prices, but they've now started kind of mentioning that because the interest rate cycle is so low, my monthly payments are lower, and hence it's more affordable to buy property. So we got that much needed clarity there. Something else that I thought was quite interesting was when we double click on the 4 segments that we looked at. So now in our previous podcasts, we had a double click where we spoke a little bit about first-time home buyers. On another one, we had a double click on investors. So today, double clicking on possibly one of the biggest and most neglected ones, which is the non-first time homeowners. What they actually showed is they showed a stagnation in terms of sentiment towards selling property. So non-first-time homeowners in Q4 said they're going to keep their confidence levels in terms of selling property. They're going to keep it at the same level, and they had a tendency of believing that selling prices were lower than that compared to the other segment groups, and then in them saying they're not quite necessarily keen to sell property, they then had the strongest growth in sentiment towards renovating property. So we saw this thing where non-first-time homeowners were saying, maybe let me not sell my property and maybe let me invest in my property. So I thought that was quite an interesting one.
And I think one of the things with non-first-time owners is that you're also not disillusioned about home ownership, right? You kind of know what it entails, the ups and the downs, and so a part of you has a somewhat different perspective to people who are obviously going to be buying for the first time. And so I'm glad that they are choosing, I'll say, the resilient path. And it's probably because you knew that going into this, it was going to be relatively long-term. Perhaps you've had instances where you've had bad tenants before. And so even what you may have experienced, last year may very well not be as bad compared to other experiences you've previously had. So you almost have a realistic sense of what happens when you own a property, and that it's not all sort of good and smooth sailing across the way. Now, one of the other things that, one of the other areas, Muzi, that I wanted to hone in on is the buying sentiment. I mean, that unsurprisingly went up. And we know that one of the key drivers of that, of course, is the lower interest rates cuts that we saw last year, or the lower interest rates, rather.
Yes. So sentiment towards buying property hit the highest levels ever since we introduced the HSI. So we had an increase of 7% in sentiment towards buying property in the fourth quarter. And the positive factors that kind of spurred this on are interest rates, as we've already mentioned, but there was also quite strong support saying, property is always a good investment.
I'm in conversation this evening with Muziwakhe, who is the manager of analytics at Absa Home Loans, and we are unpacking Absa's Homeowner Sentiment Index. If you've got any questions and comments on this, do send them through. I'm going to Natalie Leroux. I see your question. I'll ask it just slightly bit later because I see this one is about payment relief. And I think one of the things, Muzi, that I want us to look at, and you already touched on this one, was the sentiment around renovation and how that went up. And this one is an interesting one in that we've got to spend so much time at home. So I think more than anything, it's probably also one of the drivers that led us to needing to essentially renovate our respective homes.
Yes, so sentiment towards renovating property or making alterations kind of showed a similar profile to our other sub indices, where there was solid and strong growth throughout last year. This sentiment, however, hasn't quite recovered to where it was sitting in 2019, and I think a big driver of this is because of what happened last year. It became an option for people to think about much bigger structural changes. So instead of, renovating, making alterations, it suddenly became an option to think about selling and buying a home that was more purpose-built towards living, working, schooling, and doing everything at home. So even though the number is quite high, it's sitting at 73%. We did in 2019 at 79%, and I think it's partly because not everyone is thinking about investing in the property they have necessarily, but they've been given an option to kind of go and acquire another one.
Now, Muzi, the one area that didn't go up but rather remained flat is the investing in property. Perhaps go through that one with us, and perhaps some of the reasons why that remained flat instead of going higher or even lower.
Yeah, so I think the sentiment towards investing properties is one of the sub indices that had the biggest of roller coaster rides last year. In Q1, there was all of this uncertainty. There was talk of incomes potentially being impacted, and we saw that people who had investment properties were quite worried. When we had the aggressive interest rate cuts, people with investment properties said, well, why would my tenant want to rent property if they can afford to buy one? And then the renter segment, on the other hand, said there's still quite a bit of uncertainty. So even though I can afford to buy a property, not everyone was quite keen to take the plunge. And they said, it still gives me a little bit of flexibility. So we kind of saw a recovery by the investors in Q3 saying, oh, clearly it's still a great time to invest right now. But the sentiment towards investing in property has remained fairly resilient through last year. I would say surprisingly so. But in Q3 we already had quite a big recovery in that sentiment. So that sentiment remaining flat isn't necessarily a concern because it's kind of flat from an already high base.
One of the things that you've actually just touched on, Muzi, is the conversation that landlords were having relatively early on last year, sort of the tail end of Q1 as well as Q2. And that was the sense of, why would my tenant continue renting from me if they can now essentially start affording being able to buy a property because interest rates were going down. Perhaps take us through then the sentiment of buying rather than renting, because I know that would have been affected because a lot of the tenants now started having, I'll say, different conversations with themselves and making different decisions about accessing home ownership.
Yes. So in terms of buying rather than renting, Zama, across the board, last year we had very strong and very resilient growth. In more respondents saying it's better to buy rather than to rent. But like I mentioned, the one segment that actually lagged all the other segments was the segment of renters. So we had first-time homeowners, non-first-time homeowners, and investors all agreeing, saying it's better to buy rather than to rent, growing quite resiliently. And what we saw from the renter population is that even though they agree that or they had some good growth in terms of believing that it was better to buy rather than to rent, they actually grew slower than the other segments, which I actually found to be quite interesting.
We are taking your questions and comments this evening as I'm in conversation with Muziwakhe, who's the manager of analytics at Absa Home Loans. We've got a question here coming from Natalie Leroux. We've spoken about this earlier on in our conversation, Muzi. And Natalie's question is, when you take a payment relief, how does it affect the repayments to pay back? Is the term extended, or is your premium more per month?
Yeah, I think a very, very good question, Natalie, and I think it's very helpful to think of it in that way, because then you go from being a recipient of information and a structure from your financial service provider to becoming a thought leader. Those two are definitely options that can be looked at to say, keep my term the same, give me relief for 3 months, and then my monthly payments will be slightly higher so that I can catch up on the 3 months. But the route that we took kind of as the default one was to say, let's not give you additional burden in a time where your finances might be under a little bit of pressure. So let's rather extend the term by another 3 months. So the 3 months that we're giving you now in relief, let's take those and let's tack those on to the end of your term. So you'll just finish paying 3 months later. But I imagine no one would really be averse to, talking about a slightly higher monthly payment in lieu of extending a term. But those are the two options, basically.
Now, Muzi, I think one of the things as we begin to wrap up our conversation that I want to get a sense from you on is, what can we expect from Q1 of 2021? I've been in conversation with a number of property practitioners here on the show and off air, and one of the striking things that a lot of them have said is that historically, your January, February, oftentimes even March, tends to be relatively slow in the property space, to the point where they ordinarily budget for it and plan around it. A number of the various guests I've had and other property practitioners I've spoken to have actually noted how their Jan and February numbers have been significantly higher than what they anticipated. They know they closed off Q4 on a high, with a lot of them sort of hitting record high numbers, some record high in like a decade, so since inception. And one of the guests I actually recently had was saying that last month was their best month since they started their company, which for them was surprising. They didn't expect it at all. Instead, they kind of thought it would still be relatively calm. Things would only start picking up now. And so I'm interested to get a sense from you how you see Q1 of 2021 potentially looking.
So I guess, Zama, if we take stock of kind of where we are, we saw sentiment in improving last year. On the buyer side, it was, as we mentioned, it was the low interest rate cycle making debt financing more affordable, and the perceived ability of property to increase in value over time and kind of help the property owners to to go through the market uncertainty. And then on the seller side, sentiment was boosted by resilient house prices. And as we saw coming into Q4, a renewed impetus by owners to invest in their existing properties. So that's kind of where we're sitting right now. Looking forward, we don't necessarily expect interest rates to increase aggressively. So kind of around Q4 of this year, maybe Q1 of next year, maybe we might start seeing the Reserve Bank slowly start to increase interest rates, but really slowly over the next 2 or 3 years. So don't really see much of that change. So that'll definitely be good for buyers. We are seeing some healthy appetite continue to flow in on the buying side, with people continuing to want to buy properties. At some point, we're kind of going to need to potentially face the music and say, everyone who wanted to upgrade their property, buy their first property, they've kind of done that. And that could potentially lead to a bit of a slowdown. As we saw in Q4, again, consistent with the trend of last year, buy side sentiment grew much faster than sell side sentiment. So there is a potential situation where we could either sit with property prices really increasing quickly and kind of removing that benefit of low interest rates in terms of affordability, or something else that could happen is we could start seeing potential stock shortages in the popular market segments. So in my mind, I'd be interested in seeing. I guess I'll kind of hedge my bets and say either we'll see really healthy increases in house prices, or we'll start seeing stock shortages in popular segments.
Muzi, we actually got a question here that you answered without us even throwing it your way, and it was coming from Mo Ntswane, who was asking just a prediction from Muzi: when will we see a spike in interest rates again? And as you heard Muzi thinking, it's very likely going to be in Q4 of this year or Q1 of next year, but we're very likely going to see our interest rates remaining the same. I know a lot of us want to see them go at least another 25 basis points lower. We know we can afford it, and essentially, and definitely have room for another interest rate cut. But unfortunately, we didn't see it this time around. Muzi, before I let you go, because you're from the Absa Home Loans team, I actually want to I'm going to throw this question at you. It's because it's a sentiment that I've picked up slightly from, I'll say, certain corners of people who are interested in property and sometimes don't quite know if this is true or not. And it's this idea that right now, especially now more than perhaps last year, banks are, I'll say, increasingly more reluctant to extend home loans to consumers. Would you say that in this period it is harder to secure a home loan than whether last year or perhaps even pre-COVID?
Yeah, so Zama, I think it's always important to qualify such a response. Yeah. So I mean, if you look at all the banks and you look at all the banks' balance sheets and you look at the quality of loans that currently sit on the balance sheets, not all banks are kind of in a similarly healthy space right now, which means the different banks will respond in a prudent manner based on how much additional risk they can afford to take. As I said last time, we as Absa continue to be open for business, and I would say we continue to take prudent decisions when assessing the loans. So we're not necessarily gonna go on a free for all, but we're also not going to be closed for business. We're going to continue to do business where there's room to do good quality business.
Well, Muzi, that's a great place to leave it there this evening. Thank you so much for joining us.
Awesome. Thank you very much, Zama.
And that is Muziwakhe, who is a manager of analytics at Absa Home Loans. Now, we're not quite done. We're going to go for a quick break, and when we come back, we will be announcing the lucky winner of that 1,000 Rand cash prize. Remember, you have to be watching us live in order to claim the money. We're going to go for a quick break, and we'll be back just after this. Muzi, thank you so much. You're on mute. Welcome back to the Wednesday edition of the Private Property Podcast. I'm your host, Muziwakhe. Well, it is a Wednesday, and it's that time of the evening where we get to give away cash. And of course, this is for our Sherlock Holmes Spot Prize competition. And all you have to do is, if we call your name, drop us a message down here below to claim your prize. If we don't get a response from you within a minute or two, we're going to go to the next person. And if this evening we don't get a person, then we're going to roll it over tomorrow. It's going to be 1,500 rands. Now, the potential winner of that 1,000 rand cash prize this evening is Urulani Mamohatu Lerutoli. That is Rulani Mamohatu Rilitoli. So Rulani, if you are watching us live, I'm going to give you a minute or two to just drop us a message in order for you to claim that money. Now, of course, if you want to potentially be like Rulani, all you have to do is to go into our website, that is www.privateproperty.co.za, and enter the Sherlock Holmes competition. Not only do we get to give away 500 rand cash every Wednesdays and Thursdays, but the big prize, of course, is that 5,000 rand voucher every single Friday. And when the competition is done in 12 weeks' time, we are also going to be giving away a grand prize. We haven't quite revealed yet what that grand prize is, so do make sure that you keep entering so that you can stand a chance of winning. You have to be, answering the correct answers every week in order to be eligible to win that grand prize. Well, I'm going to give Rulani Mamohatu Lerutoli another quick minute. I'm going to hear from my colleague if they are watching us in the live, and they'll get to walk away with that 1,000 rand cash prize. And if they are unfortunately not, in the live, there's going to be a potential second person who can walk away with the money. And if we still don't get it, then we are just going to roll it over. Well, I've gotten word that Rulani is with us, and that is congratulations to you, Rulani. There she is on the screen. You walk away with that 1,000 rand cash prize, and it will be on your way shortly. The team is going to drop you a DM to get your details so that you can get that money. Well, it certainly is that easy to win here on Private Property, so do make sure that you go into our website. That's www.privateproperty.co.za. Well, it is a Wednesday, so of course at 8 p.m. Essie Clarkson brings you the first time home buyers show, and that is it from me, Zamantungwa, and the rest of the Private Property podcast team. Until tomorrow evening, hoping you're staying home and staying safe.
Hi, I'm Nicoline Terblanche and I'm part of the SA Women's Hockey team. And I'm the technical director of Tax Hockey. And I'm also the assistant coach for the first team ladies. I moved to Ferry Glen about 5 years ago. Ferry Glen is a really safe place and the people are really kind. Some of my friends live very close by in suburbs like Equestria and Olympus. In the morning I will wake up, make myself a cup of coffee, go for a jog in the Ferry Glen Nature Reserve or even just in the neighborhood. It's safe, quiet, and the environment is really nice. I love Ferry Glen because I'm near the city of